Alright, yo, what is up, y'all? How y'all doing? Today we're gonna go over a stock course. With this stock course, this is a free stock course that I teach everybody that want to learn about stocks that buy my ebook, but now it's gonna be online, so anybody that's interested in stocks will be able to watch this. This slideshow right here in this little class probably about 30 minutes long, but you make more money when you automate and delegate things, and I found out I was doing this the wrong way. Like y'all was doing it in an online in person type of thing. Like I teach a person one by one, but now it's just one video that everybody get to watch. I'm also working on a real course as well for actual like a paid course, and it actually go in detail as well as with my ebook. So if you got my ebook, if you got my ebook and read my ebook, you'll understand this. And if you got my ebook and you're interested in learning more about how I trade and more about the stock market, then the course will be easy to learn off of, because the book really teaches a lot and the book really goes off of a lot of what I teach. So stock class, my Instagram, Jimmy_dedications. Look me up. My ebook is online at core.com. This is the brokers and advisable websites I use. Twitter is my go-to for news. Not only that, you get to see what other people think about the stock as well. Type in the money symbol and ticker symbol of your stock. Example, money symbol, Tesla, and all the news for Tesla pop up. You can use the top news, the latest news, whatever you want, and you'll see everybody tweeting about it. Also, like it's a lot of legit news websites on Twitter as well. So if you don't want to download the Twitter, I mean, if you don't want to download the actual like Bloomberg app, you can just follow them on Twitter. TradingView is what I use to view charts on. You can use TradingView app on your phone if you want, but TradingView.com is better on the desktop because everything is better on the desktop. You have way more options on the desktop. Yeah. I use Robinhood to buy and sell shares and Thinkorswim for day trading. I use Vibe Forex to day trade binary options on HFX. These are my steps of what I took to investing, and after all of this, I'll show y'all each one of these websites one by one. A lot of people ask me about investing. Here's the rundown of how to gain the knowledge I have. Check out my ebook. Link is in my bio. It goes over 11 crucial sections about the market, how you can scale your investing portfolio. Also goes over tips and tricks I learned throughout my time in the market. You want to know what I know? You won't know what I know until you read that. Go follow Aristotle_investments on Instagram. His words are gold in the stock market. I took his course and I also read his book. Binge watch Rainy Tio on YouTube. He has so much information in his videos and they are free, just like this video. Download Twitter and use it to your advantages to see what the crowd thinks about the stocks you want to invest in. You can also see news for free. Download TradingView or use the browser form. Uh, it's better. I'm trying to go back. I don't even know how to work slideshows for real. Boom. So this is what we're gonna do. What we're gonna go over. In this class, we're gonna go over 3 sections of my book out of the 11. In my course, we'll go over all 11. Not only that, I will brief it way less as detailed as my ebook. And my ebook is also on sale 30% off this week. Technical analysis is predicting price movement through different shapes and indicators. It's just like a weatherman predicting the weather. Even though technical analysis is very easy to learn and profitable, technical analysis or indicators aren't always correct. It's the psychological factor behind the trading that makes you profitable, and my ebook will explain that unlike this brief. First, you should understand the line graph, then candlesticks. Candlesticks offer way more detail than just the average line graph. Candlesticks shows you rejection, price, and buying pressure and patterns. A line graph only shows you price. Let's go to my ebook and I'm gonna show you an example that I took in my ebook. Candlesticks. This is a candlestick section part of my book, and these are the things that candlesticks show you: the open, the close, the low, the high. It also shows you patterns. So candlesticks offer the most. I mean, y'all can read this right here. This the free version. So shit, y'all just pause and read. This is gonna be basic version. But yeah, candlesticks tell you all of this, and the line graph only show you the price. And I'll show y'all right now. Look, this thing looking crazy right now, huh? I'm gonna make it look simple for y'all. This is what a real trade. I ain't gonna say a real trader screen look like, cause ain't all real traders trade the same way. But boom. Also on my course it'll show you how to work TradingView. But if you don't know how to work TradingView, watch a YouTube video or just watch what I do. And my ebook also tells you how to use it. But right here you have your tools and everything you could select. Right here you see the average price, average the average price for each day. So April 14th, the average price is 29.80, and you know, from day on day out. So what you want to do as a trader, you want to use your technical eyes, and you want to find a place on the chart where the chart keep bouncing at, or where it keep or where it's forming a pattern. As we can tell, if we draw something, let's see, we can draw something right there like this. Let's fix it a little bit. Boom. Now we know every time BGS comes to this green line, it bounces up. Now that's how you predict what the market is gonna do. Let me actually go to something real that's happening right now. You won't be able to see that unless we use candlesticks. Shit, that one as well. You ain't gonna be able to see these unless we use candlesticks. This is a good one right here. So with the technical eye as a trader, all you're doing is putting lines where you think a price will bounce at again. So with my technical eyes, I've seen that every time price get to this green line, it bounces up. Bounced up, bounced up, bounced up, and boom, it's here again. So as a technical trader, you're gonna take that risk and say, hey, I think this thing gonna bounce again, and boom. So that's how you make money during technical analysis. Whenever you think something is gonna go up, you buy a lot of shares, and when the price of the price value goes up, you make money from it going up. And with options, you can make money if it go down, but we're not gonna go over options because it's too detailed. It's gonna take 20 minutes into itself. But yeah. So now we're gonna go to candlesticks. Candlesticks may look hard at the beginning, but I'm finna break this down and make it look simple. Candlesticks are way better than line graphs. Like I showed you, they show the pressure. So let's look at this candle first. This one right here. Let's single this one out. The bigger the body is, the more pressure it is. So we can tell May 25th, VMD had a lot of selling pressure because it had a big ass red candle. The bigger the body, the more pressure it is. So right here, it's a little small pressure, little buying pressure. It's a small amount of buyers. But when you see this, it was a big amount of sellers. Right here, big amount of sellers. Right here, big amount of sellers. Good buyers. And then they also had no wicks, so the wicks is another thing. This may be confusing, but with this knowledge I'm giving you, take your notes and then look it up. Like if you're confused about why did he say that candlestick has a lot of buying pressure, take your notes and say buying pressure research, wicks research. And after this video, go research that and it'll open your mind even more. Because now what I'm doing, I'm just giving you a taste of it. And now I'm giving you a taste. You got the recipe. Now you finna cook it yourself. So go ahead and go do that. The wicks show you rejection. Let's see. Look, I'm giving y'all a lot of info. Y'all just gonna have to go cop the book. This right here describes candlesticks. Open, close, high, low. Open, close, high, low. Bearish, bullish candle, bearish. Some patterns and the meaning of the patterns, but just go watch my ebook. But these wicks show you rejection. So uh, this candle open right here. This candle open right here. It once went up here, but then sellers came in and it sold all the way back down. So the wick at the top is showing the rejection of buyers. The wick at the bottom is showing the rejection of sellers. For instance, look, price open right here. It went all the way up. People started selling. It came all the way back down. That's a long way. It shows a rejection of goddamn buyers. Uh, and if the body is in the middle of the two wicks, it's called like it's an indecisive market. It's an indecisive pattern. I'm trying to find a wick that's at the bottom. Like right here. Price open right here. It went all the way down here, but buyers bought it so much that it went all the way back up here. And these wicks and candlestick patterns are only valuable at a support or resistance. So if you're using candlestick patterns and candlestick charts as a way to get in the trade, always look for it to be at the top somewhere or at the bottom, or the same as with your RSI indicators. You want to see it at the bottom of the RSI indicators or the top. So we went over the body. The body is the pressure. The wicks is the rejection. Now we're gonna go over some patterns. Now we're going over gaps. I'm gonna show you right now that this line graph don't show you wicks, it don't show you pressure, and it don't show you them gaps. See them little yellow circles I put? It don't show them gaps. So already you're at a disadvantage just using a line graph. And with these candlesticks, you're able to profit way quickly. Like you can use these line graphs on a 1 minute time frame, a 5 minute day trade, long-term trade. But these are gaps. It's multiple different kind of gaps, but this is just the basic. You look up what type of gaps are there in the stock market. It's like for continuation, breakaway, runaway, all that shit. But gaps, when the stock gaps up or gaps down, it's a high chance that price will go back to that area where it gapped at and refill. So if you got something trading right here and then it automatically go right here at the bottom, sooner or later it's gonna make its way back up and fill that gap to where it's right here at the same level. So it's once it was right here, it came down here. Sooner or later it's gonna come back up and fill that gap. And this is what we see right here. Look at eBay. Took a while, took a couple days actually. Boom, filled that gap. That took too long though, but this was actually a faster one. Boom, filled that gap, and boom, filled this gap. I actually got in on eBay for dividends, like right here, like 57. They just paid dividends too, 28 maybe. But I hopped in this for dividends, and I got in. I was like, okay, they paying good dividends. They could gap fill, and boom, they did. They got filled. So that's another pattern with candlesticks. This just a taste test. Man, my online course gonna go over way more than this. So we went over technical analysis. Let's go over this one indicator, this easiest indicator to use possible. Whoops. We 12 minutes into this thing. Let's go over the easiest indicator ever in the world. This indicator tells you legit when to buy and sell if you're a beginner and you don't understand nothing else about stocks. Whenever this line is at the bottom, you buy. Whenever it's at the top, you sell. At the bottom, it means it's oversold, and that means it's at a big discount. When something that is at a discount, that's when you should buy it for the highest return on your investment. If you have a BMW and it's selling for 5,000, it's at a huge discount. You're gonna buy that BMW, and when the value go back up, you're gonna sell it for 30,000. The same way with stocks. This indicator right here measures the value and it measures how fast the buying pressure or selling pressure is. So if it's fast selling pressure, it get to this white line, investors start buying into it. When it's a lot of buying pressure, you get to the top of the white line and investors start selling. Everything not 100%, but we can see it happening right now. I didn't even notice. I'm really just pulling up stocks off the top of my head. Like I ain't even organized this shit. But right here, I did organize my watch list. These stocks I invest in, but I ain't write out no plan to look at these stocks. I'm just doing it off the top of my head. But this RSI indicator, when it get to the top, stocks normally go down. When it get to the bottom, it normally go up. Because when too many people are selling, oh, everybody's selling this stock. When people selling, it's at a cheap price. That's a good time for people for buyers to get in because it's at a cheap price. And if it's a good stock at a cheap price, it's definitely a good time. If you buy a cheap car at a if you buy a good car at a cheap price, that's the best thing you can do. Same way with stocks. You never want to buy stocks at the top. When stocks are at the top like this, you never want to buy. I'm pretty sure it's a lot of people just bought this shit. Look, buyers at the top. You can buy at the top, but that ain't what I do. But yeah, when it's at the top, you sell. When it's at the bottom, you buy. And we'll go over more in depth of this. Nothing is 100% as well. Remember that. We just, I just want y'all to look at this and look how the stock price correlate as well. So y'all see when they get to the bottom of the white line, it be bouncing back up. Shit, this shit was perfect. This thing right here, 6. Oh my goodness. Let me look at these real quick. These was on my watch list. Them stocks bouncing perfect off that RSI. So now we went over the RSI. We just touched it, just a taste, just a little taste. Next, we already went over candlesticks. We already went over a line graph. Support and resistance. Support is the floor. Resistance is the ceiling. Imagine when you bouncing a bouncy ball. You throw it to the ground. Boom. Bounce off of support. It go up to the top, the ceiling, resistance, and it come back down, and it just do the same thing over and over and over and over. That's how you predict the stock price. When the stock price start doing this over and over and over and over and over again, predict that it's gonna keep doing it and hop in. And if it don't do that, it's probably gonna break out, and you can get it on the breakout. But we ain't talking about that. Let's look at J&J right now. We're looking at it. Support and resistance isn't. I would go to it in my book, but we're gonna go over it on here. Support and resistance is when the stock bounce from a resistance at the top. This is a perfect example as well. Like right there. This is a resistance. Price couldn't pass this point previously. Price went to this point again and it couldn't pass it again. So what you're doing is you're looking for patterns over and over and over and over again. Support is at the bottom, resistance is at the top. So if I draw this line, this would be a support because it's at the bottom of the stock price. It is supporting the price to stay up. You feel me? Right here. It supported the price to stay up all these times. Boom. And what you would do as a trader, oh, it's at the green line. I think it's gonna bounce again. Let me invest into it. But you want to have at least 3 or 4 reasons why. Look at the same thing with this. It's at this little horizontal support. Boom. This is a straight line support and resistance. Boom. It's also a straight line resistance right here. Price couldn't break right there. Came back down. It went up with above it a little bit. Came right back down. It bounced right here. It's right here again. It been bouncing off this green line. It's there again. So what you're doing as a trader is you just reading charts and patterns and what it did. Let me see. What's up, baby? I'm on the video. Say what's up. Hey y'all. I ain't even on the camera. But yeah. Uh yeah, we in this thing 18 minutes into it. So yeah, now we went over technical analysis, support and resistance. Support is the floor that hold the price up, just like the floor that is supporting you to stand up. Resistance is the ceiling above you, just like stocks have a resistance. A lot of new beginners buy stocks at resistance, which is wrong. If something is already at the ceiling, it has a high chance to go down. But if you buy something at support, it has a high chance to go up. So I always buy at support, and nothing is 100%. So don't really rely on a line and it bouncing over and over to tell you when to get into it, because nothing is 100%. Oh, we already went over the RSI indicator as well. Oh wow, I'm ahead of the game. Last we'll go over the RSI indicator. The RSI tells you when something is overbought or oversold. When something is overbought, that means too many people are buying it and it's worthless. It's not rare. Too many people bought it. Too many people used her. Don't nobody want it no more. And it's a sign for investors to start selling. We don't want her no more. When something is oversold, it's a sign that too many people are selling. It's rare. And investors will start soon buying into that stock. I just added this fundamental analysis part to this video because I understand a lot of people are busy. I'm busy. We ain't gonna say busy because I'm gonna say a lot of people don't like the fact that you have to watch charts every single day to make money. So we're gonna talk about fundamental analysis. Fundamental analysis is best for long-term trading. You essentially study your stock balance sheet, income statement, and cash flow, and you figure out if that's a good investment for you long term. The reason why people do this is because you get a higher return on your money than a savings account. Stocks pay you dividends. Imagine every $30 you have in something, you get paid 30 cents. That's what stocks do. The bank don't do that. The bank gonna give you a 2% or less annual return, probably 1%. 1% of $1,000 is like $10, I think. I don't know. You don't gotta be no math genius. And but with the stock, you put that $1,000 in the goddamn shares, and $1,000 or $30 worth of shares is like what, 30 stocks? No, yeah, 30. No, yeah, 30 stocks. So 30 stocks times 30 cent is, I don't know. Do the math. But obviously you see that. Oh shit, if I invest in long-term stocks, I can make more money than what a bank is paying me. And I don't have to look at charts every day. Like with fundamental analysis, all you do is put your money in there and boom. Like every time you get paid, you can just, hey, every time you get paid, put your money in eBay, AT&T, and that's it. That's what I do. At the end of the month, every time my side hustles come in, all my money, I just boom. And now that's it. That's all I do. So as you get paid from your job, all you got to do is the same thing. Just throw your money in the stock. You don't got to worry about looking at the charts. All you did was analysis one time, and you understood how the company made money. How are they beneficial to the world? You understood how they use their money. You understand the leadership, and you good to go. Once that company leadership is good and solid, and it remains there, that's all you need to know to keep investing into a company continuously and getting paid dividends continuously. For this, I use Yahoo Finance and Simply Wall Street. It's better to use fundamental analysis for long-term investment because it shows you how great a company assets and liabilities are, how much cash they are bringing in, and their revenue compared to expenses. Add technical analysis to the picture, then you'll be able to buy a good company while it's at support that has good financial standing. A balance sheet is the a balance sheet. The asset should equal the liability slash equity. It shows that every asset of business acquired solely from the funds that are supplied by its owners and creditors. Cash flow. Operating cash flow is cash generated by a company's main activity. Investing in cash flow is the purchase of assets and other venture assets. Financing cash flow is provided gains from debt and payments made by the company. Income statement. Income statement is the financial statement of a company and shows the company revenue and expenses during a particular period. So we're not gonna look at this no more because we run out of time. We're gonna check out Twitter because we forgot that. We're not gonna check this out. So let's look up Apple, and this the easiest way to find news. Boom. All that you can click Apple like the real Apple stock, or you can just read what other people put. I do both. June 11th, this 3 days ago. We can see Apple test 136 soon. What is 136? Resistance. Oh, up here? Yeah, that's a little resistance. Bounce down, bounce down. Now you get to see what other people think. Oh, this dude think that it's gonna do that again. Okay, boom. Apple weekly looks amazing. Double my position today, about 2,000 to 4,000 tomorrow. Love this best slash safest swing in the market, in my opinion. A lot of this was old June 7th, June 11th, but if you go to the latest, you can see the latest news about it. This is what I like. Like Twitter is the easiest news platform ever. This look legit. What is this? And then again, if you don't trust the random people, just click the Apple itself. All right, so we went over Twitter. Now we're going over Yahoo Finance. Let's look up Apple. We're just using Apple because it's the first thing that go to my head. Let's go to financials and boom, income statement, balance sheet, and cash flow. Now with this all you need right here to look at a company. Not really this. This is not all you need, but this is the juicy parts of what you need. You need to understand the income statement, the balance sheet, and the cash flow. You look at that on an annual time frame because it's something you're gonna be doing long term. So yeah, we can go through this real quick. Let's see what else my PowerPoint say. Okay, so these are some reasons you should invest. These are the things you should check for before you invest in a particular stock. Technical reasons, if you like technically trading, looking at charts, make sure it's at support. Check the news and make sure it has good news. I like to check the earnings and I like to check it on FinViz. FinViz is another news app. It go over in my goddamn stock course. Fundamental reasons I like to get in stuff. I make sure they're on a profitable track to stay profitable. They're beating earnings and their dividend has been rising for 10 plus years. I make sure they have smart CEOs and I read and understand page 50 of my book. And page 50 of my book is a goddamn screener. And the screener measures the P&B ratio, the PG ratio, the goddamn beta. Uh, it measures a lot of things. I think it's like 10 different things I got on there. My book is also my notes. So like if I don't remember everything, my book is my notes. And my book is written from me by hand. Took a couple months for me to write all my notes in a particular order that people could understand. But right here we got income statement. We're gonna make all this little, which it is little. So right here is the total revenue of Apple, right? Of Apple. 2020, 2019, 2018, and 2017. So if we can scroll like this, let's see how their revenue been doing so far. Their revenue been on the rise right here. Mm, now their revenue is up 274 grand from 260 grand, 265 to 29. Look pretty good to me. I mean, they grew. Their revenue grew 50,000 in 3 years, 4 years. I ain't no math genius. Their cost of revenue, how much they've been spending on their company, their gross profit, how much they profited that whole year, how much operating expenses, how much they spent operating the business, the non-operating, we're not gonna go over all of it. The net non-operating interest income expense. Uh, I don't know everything about the definitions, but we can always look them up. So yeah, this is the income statement, and this the juicy part. The juicy things are at the beginning. Balance sheet, like it says, it measures the goddamn if the liabilities and the equity gross is equal, that is equal of the total assets. That just mean all the investors. What did she say? Hold up, where we at? Balance sheet. Yeah, the balance sheet. The balance sheet, like make sure they even. It got it in his name, balance sheet. The asset should equal the liability slash equity. It shows that every asset a business acquires solely from the funds that are supplied by its owners and creditors, which shows that Apple is solely funded. Wait, it shows that Apple is solely funded by its owners and creditors. Yeah, because their assets match the liabilities and equity. They total capitalization. If you want to learn more about market caps and how to measure a stock by market cap, a ebook it is. Right here is it teaches you, it shows you the cash flow. How much money they're spending on operating, how much money they spend on investing, how much money they spend on financing, and their end cash position. So investing cash flow, this is like investing in the cash flow. Financing cash flow is financing it. Add them together right here. This TTM. I remember what is. Oh yeah, trailing 12 months. That what it mean. Trailing 12 months. So over the past 12 months. So this is like currently. So yeah, hey, we're gonna end this video right here. 30 minutes long. Hey man, thank y'all for supporting me. Shout out to all y'all. Also, I just taught y'all what I knew. I taught y'all something in 30 minutes. Hey, make sure y'all further y'all knowledge and learn more about this. Peace out.